I think people just need to talk to people that already passive investing, hear from them. And once you get familiar with the hurdle that you have to go through, it's a lot easier to go through that hurdle. And once you go through that hurdle, then you see a completely different world of possibility.
Welcome to the American Dream Builder and Investor podcast, where our vision is to inspire busy professionals, especially first and second generation immigrants and Americans, to explore the state of the American dream in 2022 and beyond. That is the Trinity of freedom: time, financial, and geography freedom. I'm your host, Missy Liu, and I have achieved financial independence, and I'm helping many others to do the same. I started out with $5,000 and have really built wealth for my family along the process. Now, I am on a mission to help hundreds of thousands of people like me to do the same. Welcome to another episode of the American Dream Builder and Investor podcast. I'm your host, Missy Liu. And today we have a special guest, also a friend, Grace Wang, with me today. She is the CEO and founder of the PNW Investment Group. It's a real estate investment firm. She's also a first-generation immigrant like me, but she didn't actually move to the U.S. until her late 20s. Because of that, she had to study extra hard, overcame the language barriers, and became the first one in her family who obtained a doctorate professional degree. Not only that is already a huge achievement, she also was the first one in her family to become a self-made multimillionaire in her early 30s. So in her early professional career as a pharmacist, Grace was struggling with work-life balance. As we all know, pharmacists, they work really long hours. Even though she earned great income, she constantly had to choose between work and bonding time with her newborn daughter. Now, that has all changed with her passive investing strategies, which we'll talk a little bit more about today, along with learning about her story. Right now, her focus is to help more people like her to generate more income and build wealth. And that's why we're talking today as well. We have a lot in common apart from our heritage and also our investing story. So welcome, Grace, to our show today.
Thank you for having me, Missy.
Yeah, my pleasure. So Grace, I think the bio talked a lot about your stories, but I know that before you started the passive investing, you were really, really deep into the active investing, managing tenants and toilets. So you're doing some of that today, which you're trying to get away from. So walk us through a little bit about your active investing. How did that come about? I do think that was important for you at that point in time. You know, without learning about how difficult it is to do active investing, sometimes we take passive investing for granted.
Yeah, so I started investing in real estate by becoming like an accidental landlord. So originally, I was just trying to help to cover my parents' mortgage by leasing a few rooms out. So that was when my light bulb went on. It's like, wow, you can actually live for free by just leasing a few rooms out. And so that's what got me interested in real estate. And of course, like when you first started to learn about real estate, it's all talk about how to acquire your rental property, renovate it, leasing it, and get a passive income. And I'm a huge action taker. So it didn't actually take me that long to buy my first property. And it was a huge, huge lesson because by being a new investor, I don't know what to look for. So I end up buying a property that's really, really run down, need like a full gut rehab. And the tenant base was horrible because I had property manager come to me. It's like, no, there's no way I'm going to manage this property if I want to live for the next 3 months. So long story short, so I started that journey and then I bought a property in a C-class neighborhood. I rehab it, lease it out, raise the rent, and then sold it the next year and double the income, double the money that I invested. That was mind blowing because as a six-figure earning professional, it's hard to see like you can actually make equivalent income in such a period of time any other ways. So that's when I wanted to double down. So fast forward 5 years, I acquired enough properties that replace our incomes as a salary, like replace my salary. And I thought to myself, oh, like now I can actually lay back, sit back and enjoy the fruit of my hard work. But little that I know, that's not near to be the truth. I was actually working harder and it actually more energy draining than having a W-2 job, handling like nonstop tenant issues. And especially when COVID hit, almost half my tenant did not pay rent. And that lasts for a long time, as what we know, because the moratorium, it didn't lift it till much later. I soon found myself like upside down. The fantastic so-called passive income,
Wow.
it kind of evaporated overnight, right? So that's kind of the wake-up call. Right around 2020, that's when I first looked into passive investing because I started to ask myself, like, there must be a better way to invest in real estate that doesn't drain my energy, but also can still reap the benefit. Then that's when I start networking with other more experienced investors. And very interestingly, that I found, like, especially the more veteran investors, they tend to go to the more passive route. They kind of have the end in their mind because all what we want, like ultimately, we are not trying to like acquire so many, like our goal at least is not as acquire as many units as we want, but we just want to accumulate in a passive income to replace our W-2s, then we can choose whatever we want to do and then spend more time with our kids and family, right? So that's my ultimate goal. And that's the ultimate goal with a lot of people. So with that end in mind, like why not just do passive? Because in that way, you're not spending so much time basically replacing your W-2 job with a different job to acquire a different type of income, right? So that's when I started thinking about like passive investing. And then fast forward 2 more years, now my portfolio is a lot more balanced. So the passive income that we have is enough to replace both myself and my husband's income. And more than half of it is from passive investing. And that is very liberating. Now I can say a lot of time, like when I leave for trip and vacation, I don't necessarily have to worry about my tenant as much as before.
That's huge. Yeah. What you shared is something we talk a lot about in our podcast, which is understand the end goal, right? The end goal is to have more time freedom. So how do you set yourself up for success from there? So it's good that you recognize the constraint. The constraint wasn't money, it was time. So I'm glad you took the action and scaled your passive income to half in your control, half not within your control, maybe slowly, like we talked about, to even more passive income. So, what were some of the things you liked about passive investing apart from the fact that it's passive?
Yeah, so it's easier to scale, definitely. So imagine that each unit, so it took us 6, 7 years to acquire enough rental income to replace my salary as a pharmacist, but only took us 2 years passive investing to replace my husband's income, and which he make a lot more than I do. That can give you a perspective, like how fast you can scale. And of course, to be able to invest passively, you need capital. So I'm not against people doing active investing at all. I mean, it's a journey, it's a different phase of life. But for people that wanted to look at both passive investing and active investing, they need to got to ask themselves, like, do I have more time or do I have more money? Right? For people that may be early on in their journey, that they wanted to accumulate more capital so they can invest eventually just for passive income, then they might want to go to the active route. But for people that have more capital and not enough time, definitely passive investing is easier to scale. So I guess to your question, the reason why I really like passive investing right now is because where we're at right now in our investing journey, that we have more capital than time. And definitely you leveraging people's, like you, when you invest passively, meaning that you invest with an experienced syndicator, they already have the team built up and they take years to do that, right? So when you invest with them, yes, you give a portion of the benefit or the profit to them, but in return, you leverage people's time, you leverage their expertise, that you leverage their team and the network that on the local market that it would take years for us to achieve. The second piece I like about this is diversification. When you buy your own rental, we tend to buy in our own city, and myself included, because you need a really tight oversight control. When you passive investing, you're no longer restricted in your local area or asset type. If you're not familiar with self-storage, you can still invest with a self-storage syndicator for example, that have experience built up for them a few years, right? So those are two main benefits that I really like about passive versus active.
Yeah, definitely. And also from the diversification piece, I guess you experienced it firsthand. You know, half of your tenants weren't paying. They're all
Yeah.
C-class in a particular neighborhood. I mean, in Washington State, in Seattle, where you live, that has a longer eviction moratorium than some of the other states. So you experienced it all at once. So that's why, to me, that's also to kind of further going on the point you talked about diversification, it makes it more of a risk adjusted return. The diversification, tenant profile, investments, in who you invest with, geographically speaking. I personally think when you do it correctly, the risks are reduced, but the returns are potentially higher.
Yes, yes, definitely.
So how do you look at the ones that's talking about, well, when I invest passively, I don't make as much as what I would be investing actively? What are your thoughts on that? I think it depends on the opportunity and the risks associated with it. But what's your experience been like?
I would say the number one determining factor is the sponsor itself. So my personal experience is this. I could potentially make a lot more as far as internal rate of return working with a very experienced operator than doing it myself, especially in the market that where I'm at right now, because I'm in Seattle, Washington, and it's a very, very growth, like a hot market in the past few years. Very, very hard to make deals work here. So what end up I have to do to be able to make the profit that I desire, I basically have to buy really rundown buildings that I need heavy, heavy rehab. It takes months to achieve. You just dump in a whole bunch of money before you see money coming in. So versus you work with a different sponsor in a market that maybe not as hard as Seattle, still have more room to grow, such as, Texas, and buy a bigger deal, right? Because when you invest by yourself, you like our capital is limited because it's just ourselves. So at the most, we probably can buy like 8 or 10, 20 units versus 100 plus unit alongside with other investors and with the experienced syndicator. So my point is this, as far as the return goes, it can be very similar even after taking into consideration like splitting the 30% or 40% in some cases to a different sponsor versus I'm doing myself because two reasons. One is the economy of scale. Because when you buy a bigger unit, the unit side will offset some of the expenses per unit ratio, right? So that's number one. And then second, because I'm able to invest a different market, have a different return metric, then all of a sudden the return is a lot better than what I can get locally.
Yeah.
So I wouldn't say it's a black and white question because it depends on the market, it depends on the sponsor's experience, and depends on the business plan. So I guess for a new investor perspective, they really need to keep their mind open and not show, like myself included in the beginning, like I thought to myself, like, why would I give up 30% of profit that I could have kept if I do it myself? And I'm a hard worker, right? I can do everything myself. And then I have 100% profit is, the sweat of equity. But once you change that mindset, your opportunity is unlimited. So
Yeah.
it's like all of a sudden, like almost like, the doors open
Yeah.
and yeah.
Definitely. It's also a mindset shift. We have very similar background, first generation immigrants, also Chinese heritage. What that typically means, okay, I can work hard, like the mindset that comes with it. Sometimes there's pros with it, sometimes there's cons with it. In this case, the mindset that sometimes we were born with, we grew up in is, I can work hard, I can make the extra money. If others can do it, I can do it too. So why give the 30%? But what we don't think about is the opportunity cost of doing that 30% kind of limits you time and energy to do more on what you are good at, which is maybe finding good passive investments to help you grow your portfolio a lot faster and a lot more at ease while you spend time with your family. It's interesting since we both have that background. Sometimes we
Yes.
overemphasize on saving money to a point that could be hindering. And I speak that from the bottom of my heart because it took me a while to change that mindset. And then now recently my mom came to visit for a few months and she's all about saving money everywhere around the house to a
Yeah.
point I have to like remind myself to hold on to a mindset I spend time breaking. So yeah. This podcast is sponsored by Life Mission Capital, founded by me, Missy Liu, where my life mission is to help busy professionals invest well so they can focus on what matters. All my life, I was taught to study and work hard for my freedom. Until one day, I realized that unless I let my money work hard for me, I will always be trading my most precious resource, time, for freedom. Since then, we have also been helping our investors passively diversify into more than 1,000 units of recession and inflation-resistant alternative investments, such as multifamily, mobile home parks, short-term rentals, and more. Learn more with our free ebooks at lifemissioncapital.com.
Yeah, definitely it's a mindset shift because we were taught all life long to work hard and save any penny that we keep saving and saving. But sometimes like we have to got to think like, what about other people that actually spending to earn more rather than just work and to earn more? I think that's a major difference. Invest to make money work for you rather than working our 24 hours to make more income. So that's
Yeah.
like I would conclude that it's like an employee mindset versus the investor mindset.
Yeah, definitely a
Yeah,
big takeaway from the rich dad part of that book for sure. Yeah.
right.
So, Grace, one thing I think we didn't cover is what's your passive versus active investment portfolio today? It would be very interesting for the listeners to know. And what was it at the beginning to now, kind of your journey in terms of numbers?
Okay. Yeah, so we increase our portfolio up to 30 units locally, but it's almost 100 units personal holding because some of it is mobile home park, right? Because mobile home park is easier to scale, and that's the area that I want to focus in this short future, mobile home park. So our portfolio consists like 30 units locally and then another 60, 70 outside of the Washington state. That's partnership with mobile home park. And then passive investing, if I consider like all the passive investing, we are almost 500 units. Some of the deals that I'm only passive as a limited partner, and some of the deals that I'm actually a general partnership on it, in addition of being the LP.
Yeah, definitely. So, with all these experiences you had from having 100% of the control, managing the full rehab, to complete passive, to being general partners, what are some of your best deal experiences and what are some of your worst deal experiences? Just as overall experience, I would love to learn, and the listeners would be interested in hearing as well.
Yeah, the best deal experience I have is partnership. So it's in the mobile home park space that I partner with a local operator. So they are doing the boots on the ground and doing all the operations. I do have certain control because I oversee the operation as well. But the thing is, I'm not doing the day to day. So
That's a
basically, I'm
huge
just
time saver.
that's a huge time saver. And also the space in mobile home park is a special niche. It's very different than managing a multi-family, for example, or a single family or short-term rental or whatnot. It require very, very attention to details. And it's just a very, very different dynamic as far as management goes. So I was very lucky to work with this local operator and we achieve really great outcome. Right now with multifamily, it's very hard to find high cash flow properties basing on the interest rates high and the market cycle that we're currently in. It's still on the higher end of the market. So versus mobile home park, some of the deal that we see is like you can achieve like 8 to 10% cash on cash in day one. For investors that looking to replace the income through passive investing, that's a great option. But definitely you need people on the ground. So that's my best experience. As far the worst experience is my full gut rehab. There's so many surprises came up and it's so stressful. It does not justify the return, especially when you do it in a smaller scale. Now, if you're talking about you rehabbing 100 unit at a time with a crew, no, not just one crew, maybe multiple crews. In that sense, it might work out. But when you're talking about like the bird strategy that people normally talk about, like buy a random house, a rehab, and you cash out, revive, and pull out the money, in theory, that's great. But the work involved is oftentimes not spoken about.
Yeah, it is. Sometimes, actually, it's funny you mentioned that. I think it was about a year and a half ago. I was speaking with a local real estate investor who did her first burr, and she was thinking about the strategies moving forward. I was asking her, why doesn't she do more burrs, and she already has time. And at this time, she was pregnant with her second baby. She's like, I don't know if I have time to do a burr. People sometimes all they talk about is how much they're able to refinance all of the property and how much rent they're collecting. But what they don't think about is on a day to day basis, especially at the beginning when you're doing the renovations, surprises you find, contractors you're working with, the experiences you have to work through when things are delayed, surprises, and managing different contract expectations, all those lines, well, even with tenants. So she told me that she has to think about another way because that was just too time intensive, especially when she has a baby coming.
And the result is not guaranteed, right? Because it depends two things, how much you can refinance it at, the value, the post renovation value. And then also have to do with the rent income and interest rate, because all those three factors can impact your outcome. And what I found myself is that, in the beginning, this is what I have to do. This is what I did. And I did 10 birds in 1 year locally. It's because, this is the deal that I can find locally. And this is something that I would like when I look back, if I were going to passive invest sooner, then I might be able to just escape that phase. But having that being said, it's still a good experience to learn about the construction site, how to handle with the contractors and how to do project management. All those experiences worth it, worth the process. But for someone that have a full-time job already and have a full family to raise, I don't think this is the best route. If you just all what you want is a passive income.
Yeah. I find it interesting. Sometimes people don't complete trust the passive investing. I understand, there's you definitely have some level of due diligence involved, but look at how we investing our 401ks or invest in the stock market. I mean, half of the people I'm guessing probably don't even know, what their 401k is tied to, like what industries, what companies, etc., right? But yet they put hundreds of thousands or millions of dollars into their 401k, just let it ride along the market without knowing exactly what it's based on. Right? Or even invest in the stocks, right? If you're investing Amazon stocks, like you don't have to be running the Amazon DCs or up or the e-commerce stores or being the CEOs. So I think when people go out of their mindset of their day to day, what others has told them about investing, go outside the traditional mindset of just 401k, they'll see there's just so much more out there. In fact, that's how a lot of millionaires and billionaires are made, especially millionaires. They always either start in the space or they diversify into the space of real estate.
Yeah, so I think it's all to do what we are familiar with, because active investing in real estate is very, very well talked about, because all the books out there, all the courses out there is to teach you how to look for opportunity, how to do the underwriting, how to acquire them, how to manage them, and then sell them eventually. That's all what people talks about and what people are familiar with. And I think to me, it's like I go through the phase of like I was 100% just active investing, and to a degree that I actually stepped down from my W-2 and then do this full time and then find myself into another job pretty much. Like I thought like I retired from my W-2 by stepping down, but in reality, I just replacing my original W-2 job with a different W-2 job that I'm paying myself. So like from like employee to self-employed, which is not much different in a sense. So I think people just need to talk to people that already passive investing, hear from them. And once you get familiar with the hurdle that you have to go through, it's a lot easier to go through that hurdle. And once you go through that hurdle, then you see a completely different world of possibility. Yeah.
Yeah, that makes sense. So from your passive investment standpoint, you mentioned you invest in mostly multifamily. And what are the other things you invested in so far? And just from your personal experiences, what did you like about those specific investments from a passive investing standpoint?
Actually, not a lot of investing is actually multifamily. So
Ah, okay.
because the market cycle that we're in right now, have a multifamily deal to work, especially on my blocks, it's hard to find. So I'm investing debt fund, meaning that the sponsor actually lending money to operators. And then as an investor, we get a set return. And then on top of it, we have a margin on top if the loan actually performed better. So that's one. And then I also invest in ATM fund as well as short-term rental, and mobile home park is a big piece as well. So I think my portfolio is pretty balanced. We invest in multiple because in real estate there's so many ways to invest, and there's a different capital stack that you can invest. So talking about debt fund is because when you buy property, the bank actually the biggest owner on the deal. So the position is the safest. And then after that is the investors, right? Or the preferred equity people. So I want to make sure that my portfolio is more risk adjusted and more risk balanced it out. So I have some money in the debt, so which is the most safe place to invest my money. And then I want to diversify different asset types. So multifamily, mobile home park, and also ATM fund is not actually related to real estate at all. And then short-term rental, like short-term rental, I've been thinking about investing in short-term rental for a while. Myself as an active investor, I just keep holding back because I know that's more management intensive, even more than the long-term buy and hold. But luckily, through Missy, actually, I invested in a short-term rental fund. So then again, it's leveraging sponsors' skills and experience and then reaping the benefit from it.
Yeah, definitely. Partnership always goes a long way, and I'm glad that we took that to the next level in our relationship as well. And the multifamily and mobile home park space is more of a staple. So with the ATM, I heard it's also fairly recession resistant. With recession, people use ATMs more. And yeah, I think your portfolio is pretty balanced, and I'm excited to potentially working more on together on different things and see how we can help each other and help others continue to grow in their freedom and their impact journey as well. And then coming close to the end of the show, is there anything else you wanted to cover about your passive investing journey or your investing journey in general that you feel our listeners would want to hear?
Yeah, one last thing I want to kind of bring awareness to listeners. We are in a very volatile market right now. So if you are interested in investing passively, I would say please educate yourself how to vet a sponsor. And vetting a sponsor, the operation team, and the underwriting, verifying the underwriting is very, very important. The key factor to make sure that you're actually successful in passive investing. And that's the area that I want to focus my attention on as well, to including invest our money and alongside our investors' money, is to find and vet very carefully, do a lot of due diligence on sponsors, not just the underwriting side, but the operations side, actually visit them on site and see how the operations and make sure that we are actually choosing the good operator to invest with. It's given the phase of the investing cycle that we're currently in. But having that being said, I'm foreseeing there's a lot more opportunities down the road in the next 12 to 24 months. So the first thing that investor need to do, of course, is education, but don't sit on the sideline too long. A lot of time when we overthink stuff, we end up not taking action. And 10 years down the road, we're still in the same place. And that's the worst scenario. I would rather take action and make mistakes fast so I can learn fast, so I can also move forward fast. So that's kind of what I want to wrap up with.
Yeah, that's great. Yeah, especially right now with whether you believe recession is already here or not, we need to be prepared. And this is, like you said, likely opportunities coming up in the next 12 to 24 months. So be prepared, get educated, and if the opportunity makes sense, go ahead and invest. What's the worst case that can happen? Make sure you manage your investment funds appropriately, your emergency funds appropriately. The best thing you can take away from any investment is a lesson. Either way, you're right. It's best if you have the money, but it's also good when you learn a lesson. So That's awesome. Thank you, Grace, so much for your time here today. If our listeners want to get in touch with you, what's the best way for them to get in touch with you?
Yeah, so the best way to go to my website is PNW. The PNW is stand for Pacific Northwest. On the website, you can also find like a mobile home park investing passive investor guide because I'm very passionate about mobile home park and that's the topic that I talks about a lot on my website. So feel free to download a copy of that. It's free to grab.
Yeah, that's awesome. Thank you so much, Grace, for your time today and sharing your stories with our listeners and what you've learned. Appreciate it.
Thank you, Missy.
Thank you so much for tuning in to the American Dream Builder and Investor podcast with me, Missy Liu. We hope you enjoy the tips and tricks that others have used to build their American dream and their trinity of freedom. We would love for you to subscribe and leave a rating and a review. You can also find all the episodes and details on lifemissioncapital.com. Until then, let your life mission go wild.